Florida homeowners are watching their housing dreams slip away right now. Not because of a stock market crash or bank failures, but because of something far more insidious. Your monthly housing costs are exploding from directions you never saw coming. Property insurance premiums shot up 34% in just 3 years. Property taxes jumped 40%. Meanwhile, home values dropped for the first time in over a decade. This isn't just another market cycle. Multiple forces are converging at once, creating the most dangerous housing affordability crisis Florida has faced since 2008. Here's what you need to know immediately. Number one, home prices are actually falling across Florida. Florida home prices dropped 4.3% over the past year. According to Zillow's latest data, the median single-family home price sits at $415,000 as of December 2025, down from $430,000 in April 2024. This marks the first sustained price decline since the 2008 financial crisis. Several Florida markets are seeing even steeper drops. Tampa Bay properties fell nearly 10% in certain neighborhoods. Fort Myers experienced similar declines as inventory piled up faster than buyers could absorb it. Even Miami, traditionally bulletproof during downturns, saw median prices slip 0.9% year over year. The problem isn't just falling prices. It's falling prices combined with rising costs everywhere else. You might think cheaper homes would help affordability, but when insurance and taxes are skyrocketing, lower purchase prices don't matter. The Florida Association of Realtors reports that homes are sitting on the market, an average of 49 days now, up from 30 days during the peak. Sellers are getting desperate, slashing asking prices and offering incentives just to move properties. Many are pulling listings altogether rather than accept lowball offers, hoping the market will recover. But with 110 straight weeks of inventory increases through October 2025, that recovery keeps getting pushed further out. Number two, insurance costs hit record highs despite stabilization claims. Florida homeowners now pay an average of $3.48 annually for basic homeowners insurance. That's up from $2.98 just 3 years ago, a 34% increase. Some counties face even more brutal numbers. Monroe County homeowners in the Keys pay an average of $9,058 per year. Miami-Dade residents shell out around $6,614 annually. Insurance companies and state officials keep claiming the market has stabilized, but that's misleading. Yes, the rate of increase has slowed in 2025. Monthly increases dropped to nearly flat by September 2025. But stabilization at these astronomical levels isn't relief. It just means prices stop climbing after reaching heights that many families simply cannot afford. The insurance crisis stems from multiple factors converging at once. Hurricane Ian caused $113 billion in insured losses in 2022. Then Hurricanes Helen and Milton added another $100 billion in combined damages in 2024. Reinsurance costs, the insurance that insurance companies buy, exploded by 50 to 100% for many carriers. Those costs immediately got passed to you. Florida accounted for 76% of all homeowner insurance litigation in the entire United States. At one point, fraudulent assignment of benefits claims drove up costs further. Contractors would promise free roof replacements, inflate claims, then sue insurers when disputes arose. The 2022 and 2023 legislative reforms curbed these practices, but the damage was already done. Your premiums rose to cover years of fraudulent claims and excessive litigation. Even homeowners who never filed a single claim saw their rates jump. That's because insurers assess risk regionally and statewide, not individually. If your county experienced heavy claims, everyone's rates went up. 10 insurance companies went insolvent and left Florida entirely between 2020 and 2023. Thousands of homeowners received non-renewal notices and scrambled to find any coverage at all. Many ended up with Citizens Property Insurance Corporation, the state's insurer of last resort, which typically charges higher premiums and offers less coverage than private carriers. Number three, property tax revenues exploded 40% in 3 years. Florida property tax collections reached $59.2 billion in the current fiscal year. That represents a 40% increase in just 3 years. This growth happened nearly twice as fast as the combined growth of population and inflation during the same period. Over the past 10 years, property tax revenues doubled. The main driver is simple math. Florida property values more than doubled between 2015 and 2025. When your home's value shoots up, so does your tax bill, even if the millage rate stays the same. The median effective property tax rate in Florida is 1.14% compared to 1.02% 2% nationally. On a $400,000 home, you're paying around $4,560 annually in property taxes before exemptions. The Save Our Homes Amendment caps annual assessment increases at 3% or the Consumer Price Index, whichever is lower. This protection only applies to homesteaded properties, your primary residence. If you own rental properties, vacation homes, or commercial real estate, you get no cap protection. Those properties can see assessment increases up to 10% annually. Governor Ron DeSantis and Republican lawmakers are now pushing multiple constitutional amendments to eliminate or drastically reduce property taxes. House Joint Resolution 2011 would eliminate all non-school property taxes for homestead properties. HJR 203 would phase out non-school taxes over 10 years. HJR 205 would exempt residents aged 65 and older from non-school property taxes entirely. These proposals sound appealing until you examine the math. Eliminating non-school property taxes would create a $43 billion annual revenue shortfall. Local governments rely on property taxes to fund police, fire departments, road maintenance, and other essential services. To replace this revenue, the state would need to increase the sales tax from 6% to at least 8.85%, 85% possibly higher. That means you'd pay more every time you buy groceries, gas, clothing, or anything else. The Florida Chamber of Commerce estimates this would shift the tax burden away from homeowners to everyone, including renters who get zero benefit from property tax elimination. Number 4, mortgage rates remain stuck above 6%. Mortgage rates have been hovering between 6.3% and 7% throughout 2025. The Federal Reserve cut interest rates 3 times during the year, but mortgage rates didn't follow the same trajectory. This disconnect frustrates buyers who expected meaningful relief. At current rates, a $350,000 mortgage at 6.5% creates a monthly payment of around $2,212, not including insurance and taxes. Compare that to the same loan at 3% just 3 years ago, which would have cost $1,275 monthly. You're paying $737 more each month or $8,844 more annually just in interest. Higher rates devastate affordability calculations. Many families who could have qualified for a $400,000 home at 3% now can only afford a $275,000 home at 6.5%. In a state where the median home price is $415,000, this price-out effect is brutal. First-time home buyers dropped to an all-time low of 21% of all purchases, well below the historical norm of 40%. These buyers are also much older now with a median age of 40. Young adults can't break into home ownership because high rent, student loans, and childcare costs prevent them from saving down payments while simultaneously dealing with higher mortgage rates. The National Association of Realtors forecasts that mortgage rates might drop slightly to 6.3% by the end of 2025, but this modest decline won't dramatically improve affordability. Many potential buyers are staying on the sidelines, hoping for rates to drop below 5%. But experts predict rates will remain elevated for the foreseeable future as the Federal Reserve balances inflation concerns against economic growth. Number 5, construction costs nearly doubled since 2015. Construction costs in Florida averaged $103 per square foot in 2015. By 2024, that figure peaked at $160 per square foot. That's a 57% increase in less than a decade. Labor shortages, supply chain disruptions, and inflation all contributed to this surge. These higher construction costs affect you in multiple ways. First, new home prices start higher because builders have to cover their increased costs. Second, your insurance premiums rise because replacement costs are higher. If your home burns down, the insurance company needs to pay current construction rates to rebuild it. Third, property assessments increase because appraisers consider replacement costs when valuing homes. The insurance industry specifically ties policy costs to construction expenses. When the National Association of Home Builders reports that rebuilding costs jump from $103 to $162 per square foot, insurers immediately adjust their risk models. They calculate how much it would cost to completely rebuild every insured property in Florida after a major hurricane. Those calculations drive premium increases. Florida's building code requirements got stricter after Hurricane Andrew in 1992. New construction must withstand higher wind speeds and meet more stringent standards. While these requirements save lives and reduce damage during storms, they also increase construction costs significantly. Materials like lumber, steel, and concrete all saw dramatic price increases during and after the pandemic. Lumber prices spiked over 300% at one point in 2021. Although they've since declined, they remain well above pre-pandemic levels. Skilled construction labor is in short supply across Florida. Electricians, plumbers, framers, and other tradespeople can charge premium rates because demand far exceeds supply. Number 6, inventory levels created a buyer market, then suddenly reversed. Florida experienced 110 consecutive weeks of inventory growth from early 2023 through October 2025. Homes piled up on the market because buyers couldn't afford them at prevailing prices and interest rates. This shift gave buyers negotiating power for the first time in years. Sellers had to reduce prices, offer incentives, and accept contingencies they could previously reject. Then something strange happened. Starting in October 2025, inventory levels began declining. This wasn't normal seasonal variation. New listings dropped between 2 and 7% year over year every month from May through September. The listings, properties pulled off the market without selling, increased 60% year over year in Florida. Economists point to several factors driving this reversal. Many urgent sellers already sold their properties during the inventory surge. Those who remain aren't desperate enough to accept current market prices. They're choosing to stay put rather than sell at what they consider a loss. New construction pipeline dried up significantly. Fewer builders are starting projects because financing costs are high and buyer demand remains weak. This means less inventory coming online from new development. Some counties show 4.6 months of supply, which approaches balanced market territory. A 6-month supply is considered normal equilibrium between buyers and sellers. But this metric can be misleading when delisting rates are high. Properties sitting on the market for extended periods inflate the inventory count. But if many of those get pulled before selling, the available inventory shrinks quickly. Redfin's chief economist noted that sellers are pulling back because of price weakness. They'd rather wait out this period than sell at depressed values. This creates a standoff between buyers who won't pay yesterday's prices and sellers who won't accept today's prices. Number 7, migration into Florida slowed, but remains above pre-pandemic levels. Florida was the number 2 growth state in 2025, according to U-Haul migration data. Domestic migration into Florida cooled significantly from its 2022 peak, but remains stronger than pre-pandemic levels. This continued population growth keeps housing demand elevated even as affordability worsens. The profile of who's moving to Florida shifted dramatically. During the pandemic, remote workers flooded in from high-cost states like New York, California, and Illinois. They could work from anywhere and chose Florida's no-income tax environment. Many paid cash or made all-cash offers, driving prices to unsustainable levels. Now that remote work mandates ended and companies called workers back to offices, that migration wave slowed. The new Florida arrivals tend to be retirees with substantial home equity from selling properties in expensive markets. These buyers often purchase with cash or large down payments, tapping equity gains built over decades. They're less sensitive to high interest rates because they're not borrowing much. Meanwhile, younger workers trying to establish themselves in Florida face brutal competition from these cash-heavy buyers. First-time buyers can't compete with someone offering 20% above asking price with no financing contingency. International buyers also returned to Florida in 2025. The number of residential purchases by international buyers increased 51% compared to 2024. Canadians represent the largest share, accounting for 18% of international volume. Latin American and Caribbean buyers make up 45% of foreign purchases. These buyers view Florida real estate as a safe asset, especially when their home currencies are unstable. They're willing to pay premium prices for U.S. property, even when domestic buyers are pulling back. This sustained migration keeps Florida's housing market from experiencing the dramatic price crashes seen in some other states. Constant demand from new residents creates a floor under prices, even when local residents struggle with affordability. Number 8, rental market faces simultaneous pressure from multiple directions. Florida's rental market is caught in a vice. Rents remain near all-time highs in many markets, making it impossible for renters to save for down payments. Meanwhile, landlords face exploding costs that force them to raise rents just to break even. This creates a vicious cycle that hurts both renters and property owners. Average rents in Florida vary wildly by market. Miami averages around $2,800 for a two-bedroom apartment. Tampa Bay rents run about $2,200. Even smaller markets like Fort Myers see rents above $11,800. These figures represent increases of 30 to 50% since 2020 in most areas. Renters earning Florida's median household income of roughly $67,000 are spending over 40% of their gross income on rent, far above the recommended 30% maximum. At the same time, landlords are getting crushed by rising operating costs. Property insurance for rental properties increased even more than homeowner policies in many cases. Some landlords saw insurance premiums triple or quadruple. Property taxes on non-homestead properties can increase up to 10% annually with no cap. Maintenance and repair costs soared with general inflation and higher construction labor rates. Many small landlords are selling their rental properties rather than continue dealing with these pressures. They can't raise rents enough to cover their increased costs without pricing out tenants entirely. When they sell, those properties often get purchased by owner-occupants or large institutional investors. This reduces the available rental housing stock, putting even more upward pressure on rents. Eviction rates increased in 2025 as some renters simply couldn't keep pace with rent increases. Florida's eviction process is landlord-friendly compared to many states. But even so, evictions create vacancies that cost landlords money. Smart landlords would rather work with struggling tenants than go through eviction proceedings. But when their own costs are spiraling, they have limited flexibility. The Live Local Act passed by Florida's legislature attempts to address rental affordability by encouraging more construction and limiting certain local regulations. However, new rental construction takes years to come online, and developers are hesitant to start projects when financing costs are high and the economic outlook is uncertain. Number 9, coastal areas face existential climate insurance questions. Properties in coastal Florida face a unique double threat that could fundamentally reshape who can afford to live there. Beyond standard homeowners insurance, coastal properties require flood insurance. The Federal Emergency Management Agency overhauled its flood insurance pricing under Risk Rating 2.0, which calculates premiums based on individual property risk rather than flood zone averages. This change caused flood insurance premiums to surge in some areas. Properties that previously paid $800 annually now face bills of $2,000, $3,000, or even higher. Combined with homeowners insurance averaging $5,700 statewide and much higher in coastal counties, total annual insurance costs can exceed $10,000 to $15,000 for coastal properties. Only 20% of Florida homeowners carry flood insurance, but it's mandatory if you have a mortgage and live in a high-risk flood zone. Many homeowners only discover this requirement when they go to close on a purchase and their lender demands proof of flood coverage. The compounding effect of wind and flood premiums makes coastal home ownership increasingly impossible for middle-class families. These areas are gradually shifting toward only wealthy buyers who can afford $15,000 annual insurance bills or who purchase properties with cash and self-insure. Fort Myers Beach, devastated by Hurricane Ian, illustrates this transformation clearly. Before the storm, the barrier island featured family-run hotels, modest beach cottages, and year-round residents with working-class jobs. After Ian, rebuilding costs combined with new construction requirements and insurance rates pushed many long-time residents out. Properties are being rebuilt as expensive hurricane-resistant structures that only high-income buyers can afford. Shelton Weeks, director of the Lucas Institute for Real Estate Development at Florida GF Coast University, explained that the town emerging after Ian will be financially out of reach for many who called it home before. When old wood frame beach cottages get replaced with new structures built to current code, prices inevitably rise. Higher incomes move in and some people get displaced. This pattern is repeating across coastal Florida. Naples, Palm Beach, Miami Beach, and other premium coastal areas are becoming increasingly exclusive. The middle-class coastal homeowner is disappearing, replaced by either wealthy individuals or large-scale investors. Number 10, a perfect storm with no clear resolution timeline. Everything hitting Florida's housing market right now is happening simultaneously. That's what makes this different from normal market cycles. Usually, one or two factors create pressure, but other elements provide relief. Not this time. Home prices falling doesn't help when insurance and taxes are rising faster. Lower mortgage rates don't matter if you can't qualify because prices are still too high. More construction doesn't solve affordability when building costs make new homes expensive. The National Association of Realtors predicts home sales could increase 14% nationally in 2026 as conditions improve. But Florida faces headwinds that don't apply to most other states. No other state has Florida's insurance crisis. No other state lost 10 insurance companies in 3 years. No other state faces the same climate risk profile that drives coastal insurance to prohibitive levels. Legislative responses are creating more uncertainty rather than stability. Proposals to eliminate property taxes sound appealing, but could force massive sales tax increases that hurt lower-income residents disproportionately. Insurance reforms passed in 2022 and 2023 are helping, but they can't undo years of accumulated rate increases. The market needs time to adjust, but how much time? Experts disagree wildly. Some say 2026 will bring recovery. Others predict years of stagnation or further declines before equilibrium returns. Construction costs won't return to 2015 levels. That's permanent inflation baked into the system. Climate risks aren't decreasing. They're intensifying, which means insurance challenges will persist indefinitely. Migration into Florida will likely continue as long as other states maintain income taxes and higher costs of living, keeping pressure on housing demand. The honest answer is that nobody knows when Florida's housing market will stabilize. Too many variables are moving in different directions. What we do know is that current conditions are unsustainable for many Florida residents. Something has to give. Whether that's prices dropping further, incomes rising significantly, or people leaving Florida for more affordable states. The market will eventually find equilibrium, but the path there will be painful for many homeowners, renters, and investors caught in the transition. Florida's housing situation demands your immediate attention. Whether you own, rent, or are thinking about buying, don't wait for things to magically improve. If you own a home, check your property tax assessment right now and appeal if it's too high. Shop your insurance every year, not just at renewal time. Consider wind mitigation improvements that qualify for premium discounts. If you're renting, understand that your landlord is probably facing cost pressures that will eventually reach you through rent increases. If you're trying to buy, get pre-approved, but don't rush into a purchase just because prices drop slightly. This market has further to fall in many areas. Hit that subscribe button and turn on notifications because I'll be tracking every development in Florida's housing crisis. Drop a comment telling me how these issues are affecting you personally. Share this video with anyone considering moving to Florida or buying property here. They need to see the complete picture, not just the sunshine and beaches.